What's going on, friends? You're watching Live Fun, Live Smart TV. I'm your host, Tony Aguilar, the Gen Y finance guy. Today, I'm going to talk to you about the difference between a bank and a credit union. Now, on the outside, they look the exact same. You can walk in, open an account, deposit money, grab a debit card, pull money out of their ATMs. You can get loans, lines of credit, mortgages, all that fun stuff from both of them. That's on the outside. On the inside, the way they actually work is totally different. Now, a bank is a for-profit business, and like any business, they have an obligation to their shareholders. And unless you actually own stock in your bank, you're not a shareholder, so their obligation isn't really to make you happy. Now, the way a bank makes money is the money that you deposit into their accounts, they lend that money out to other people in forms of loans, lines of credit, and mortgages. Also, they make money by swipe fees. Last year, banks made $19 billion in swipe fees. They made $38.5 billion in overdraft fees. They charge you for ATM fees, for getting paper statements, for using online banking. I mean, the list goes on and on. That's how they make their money. Now, a credit union is completely different. A credit union is a not-for-profit business. Not a nonprofit because they don't take donations or they don't get grants. But they are a not-for-profit business, and just like any business, they have an obligation to their shareholders. Now, their shareholders are you guys, people who have accounts with them. So if you deposit money with the credit union, you actually become a shareholder. You actually have ownership of that credit union. It's wonderful. And just like any business, they're going to generate revenue and profits. And with those profits, they're able to give you free checking or low-fee checking. They're able to refund some of your ATM fees and just give you the perks like a big bank. Now, at the end of the year, if they have revenues or profits left over, they pay that out to you in the form of dividends. And a couple of years ago, credit unions didn't have the technology to keep up with big banks. They didn't have the cool online banking and all that fun stuff. But times have changed. Credit unions have been able to catch up, and so they're able to stay on the same playing field as most banks. So that's the difference between a bank and a credit union. If you guys have any questions, hit me up at tony@amitiadvising.com. And in our next video, we're actually going to talk about what to look for in a financial institution to find the right one for you. So until then, live fun, live smart.